Guys, you need to be focused on generating passive income if you want to achieve financial freedom. So if your goal is financial success and financial freedom, then you've come to the right place. I'm doing a series of videos on this channel where I talk about passive income ideas. And if you missed my last video, I've included a link in description, but there I talk about generating passive income by investing in real estate. And this time we're going to take a look at generating passive income from dividends. Now, why should you even care about dividends? Well, it's always best to try and diversify your portfolio, right? Imagine you have all of your money in real estate and something bad happens in the real estate market. Now, in this case, you will have other income streams that you can fall back on. And one of them could be dividends. And dividends are also quite attractive because it's pretty simple and can be quite hands-off. Okay, so first off, what are dividends? Well, as companies operate and they sell goods and services, they generate some profit. And it's up to the management of that company to decide what to do with that profit. So some companies may want to keep all of the profit that they generated and use that to reinvest back into the business for future growth and expansion projects. While others may say they want to take that profit and distribute it out to the shareholders of that company to compensate them for investing in the business. And this is called a dividend. Now, most companies do a bit of both. They retain some of the profits for future expansion and they pay some out as a dividend to the shareholders. So what should you keep in mind in terms of this definition? Well, by focusing on companies that pay a high portion of the profits out as a dividend to the shareholders every year, this could be an opportunity for you to generate some passive income. Now, the profits of companies can fluctuate quite a lot from one year to the next. And the companies are quite aware that many investors are buying their stock because they're expecting that dividend income. So they try and keep that dividend payment every year as stable and predictable as possible. Because a sudden change in the dividend payment, especially if they reduce it, can have a negative impact on the stock price because maybe investors may be concerned about that business. But of course, sometimes they may be forced to change. Like during this pandemic, a lot of companies have had to suspend all their dividend payments. So it's not always a guarantee. Either way, dividend investing has become a really popular investment strategy, especially for people that are looking for ways to generate some passive income streams. Dividend investing is also something that I'm personally planning to do more of in this year in my portfolio. And even if you look at one of the fastest growing finance channels on YouTube, Andre Jick, he's often talking about his dividend investment portfolio. So why doesn't everybody do this, right? As good as it all sounds, there are a few negatives that you should keep in mind and that I want to flag for you so that you have the full picture. Number one is taxes. In most countries, there is a withholding tax applied to dividends. So you may end up getting quite a bit less than what the company is actually paying out as a dividend. And you generally can't deduct any expenses to reduce that withholding tax. Now, the second drawback, and this one is not so obvious, but if a company is paying out a large portion of their profits in dividends to their shareholders, well, that means that only a small portion is left to invest in future growth and expansion of the business, and so the stock price could be affected. You know, think of it this way. When you buy a stock, all right, your return is kind of comprised of two main components. The first one is the movement in the stock price, and the second one is the dividend that you get. Now, if the dividend is larger, then it means that the company has only taken a small portion of that profit and reinvested it into future growth and expansion. And this could have a negative impact on the stock price. Now, while the dividend may be attractive, the second component of your return, being the stock price movement, could be falling behind some of the other companies that are investing more in their growth and future expansion. And guys, if you're enjoying this video or if you're a fan of dividend investing, please give this video a quick thumbs up and subscribe to the channel to catch more content to help you with your finances. So, how can you get in on the action? Well, usually you can just buy a stock of a company that's well known for having a high dividend payout. These are companies like Exxon or Johnson & Johnson or AT&T. And for my South African peeps, companies like Kumba Iron Ore or Sanlam or Woolworths. But just remember, you are buying a stock. And that stock price can fluctuate just like any other stock. So keep this in mind. But when it comes to passive income, you know, the focus is on the cash flows. And in this case, it's the dividend. So usually when people are looking at buying a stock for the dividend, then they're not so worried about short-term stock price movements because they kind of look at it more from a long-term perspective and cashing in those dividend checks. But if you're unsure of which stocks to buy, or you don't want to analyze individual companies, then probably an easier way is to just buy an ETF or exchange traded fund that's focused on dividend stocks. I always say that if you own a stock, then you should try and keep up to date with what's happening in that company, because things can change quite fast. And this was confirmed recently by Warren Buffett at the annual shareholders meeting of Berkshire Hathaway. And in this meeting, he put up a presentation showing the top 20 biggest companies in the world 30 years ago compared to today. And when you look at the top 20 companies in the world from 30 years ago, not one of them are in the top 20 companies of today. So it can be quite hard to predict which companies are going to do well and grow to be the biggest companies of the future, even not 30 years from now, but 10 years from now or 5 years from now. And so this is why a lot of people prefer to go with an ETF instead of buying individual stocks. So what are some good options for dividend ETFs? Well, Vanguard have the dividend appreciation ETF and also the high dividend yield ETF. And you can also check out the iShares Core High Dividend ETF. So are you considering generating some passive income from dividends? Or maybe you've done so already and you found some good stocks that pay out a lot as dividends. Let me know in the comment section down below. Okay guys, so in the next video, I'm going to keep going and share some more passive income ideas. So if this is something you're keen on, remember to subscribe to the channel. I'll see you next time.